Good morning, ladies and gentlemen. My name is Greg McCloskey from ForexLive.com. Today's date is April 6, 2023. This is a morning Forex technical report where I take a look at some of the technicals and add a little fundamentals in this morning's report. So let's get started. First off, this morning we did get initial jobless claims. They moved up from with a 200K estimate up to 228,000K. Moreover, the prior week was revised higher to 246K from 198,000. What is the reason? Well, the seasonal adjustments, or the way that they calculate the initial claims, went from, I think, additive to multiplicative, or vice versa, and that resulted in the spike in the seasonals. You can look at this chart right here, and you can see this red line represents 200,000. If you recall, going back over time, the number has been much less than 200,000. In fact, or not much less, but below the 200,000 line. In fact, if this is the chart from last week, and you see this red line represents the 200,000 level, and most of the data, apart from that one spike right here, was below the 200,000 line. Let's move back up to the upper chart, and we can see that the effects of the seasonals has the numbers not only above the 200,000, but the trend is to the upside here since really mid-January. So has employment been deteriorating when the initial claims were showing that the employment was steady, if not strong? Yes, it seems that way, at least from the way the calculations are coming through. The COVID issues continue to weigh on the markets, whether it's from adjustments from things like supply chains and stuff like that, or from the data and how to interpret it, how to adjust for the big changes that occurred. We are still living that nightmare. What we saw in the markets was that the U.S. 2-year yield initially moved to the downside here. We saw a sharp spike to the downside, down to around 3.67%. Since then, the yield has moved back to the upside. Currently trades at near the highs, I guess, of the day at 3.75. Not near the highs, it's sort of near the middle, I guess. This is the 5-minute chart, but currently up higher than the pre-number levels down here near 370. So it's moved to the downside initially, and then moved back to the upside. You can see we're starting to move back to the downside on the 5-minute chart. What that has done in the currency markets, we'll see how that plays out, especially on a currency pair like the dollar versus yen. So let's get started by taking a look at the euro versus US dollar to start things off here. If we take a look at the euro versus US dollar from a technical perspective, we are seeing that the euro is, after moving higher, a lower dollar initially off of the jobless claims data, has reversed course along with the interest rates, 2-year yield, and we are seeing now the euro moving back below the 100-hour moving average. Largely, the market's been trading up and down around the 100-hour moving average. Recall from yesterday, we were looking at this area. The price was trading above this yellow area here, defined by different swing levels here on the hourly chart. Swing high here, swing high here, swing high here, swing high here, and then we moved above those levels through here. And then in trading yesterday, we were around here when the market opened, and we moved below the 109.25 level, and we've been able to stay below that level. This level represents a key level that if we are able to keep the bias below that level, and we have so far today, then the bias remains to the downside. The problem is the 100-hour moving average getting and staying below that level has been a challenge as we tried below and ran out of steam, tried above and ran out of steam, now trying back below again the level, and we'll see if the momentum can continue down to where the 200-hour moving average is, rising 200-hour moving average, and this other swing area defined by levels going back in time to these levels. In this case, the price has been trading usually a level as a point of moving to the upside or moving to the downside, moving upside, moving downside, moving upside, moving to the downside. You can see the pattern developed through here. So it's been pretty consistent around this 1.08629, 1.0871 is leading the way, either higher or lower. So we'll see how that all plays out in trading here today. But the stay below the 100-hour moving average keeps the bias more to the downside. Let's take a look at the dollar versus yen, and I mentioned how that the impact of the interest rates and the initial claims data. The initial move was to the upside in interest rates, or to the downside in interest rates, and we did see a move lower in the dollar versus yen, a spike lower here, but then we quickly rebounded. Currently trading at 131.58, which is right around this level right here into this yellow area. Defined by different again swing lows and swing highs going back in time, coming in between levels of 131.55 and 131.84, so a little wider than the euro versus US dollar range there. But nevertheless, you can see how the market reacted in this area, and it becomes a level of deflection or reflection, depending upon how you look at it. Does it move back to the downside, or does it move back to the upside? In other words, so with the price currently trading right near the low of this area, we're starting to move into that yellow area, but we do have to get through the 131.84, and then we need also to get above the 200 and 100-hour moving averages, the green and blue lines in this chart. We have another swing area through here where you can see the different swing where it became a floor here, it was a ceiling, and another floor through here was a market using the area as a point again of either support or resistance. So the dollar versus yen is trying to make a move to the upside, but we need to get above the 131.84 level in order to increase the bullish bias for that currency pair. But buyers are trying to make a play. Let's take a look at the sterling versus US dollar next, and this is off the hourly chart. And if we look at the moving averages here and things like the trend lines and price action and trading here today, the price action is largely up and down, but we did find initial support against this old trend line where we were in this channel through here. We broke below that channel on Monday's trade, moving down below the 100 and 200-hour moving averages down to this swing area down through here, and found support buyers that pushed the price quickly back up to the upside and back into this channel. Italy, we went above the channel here and failed. So we have some failures in the channel, but we tried to hold support through here and also against the swing area here, but could not. And we are seeing a rotation back to the downside. We are testing the 100-hour moving average. That's the blue line in this chart, and that's going to be key here in the short term. If the price can stay above that level and above the low of this swing area through here, we would the buyers would still maintain a little bit more of the control here and push the price to the upside. If it fails below that level, then I would expect that we see some further probing to the downside with the 200-hour moving average as the next key target. We did move below that 200-hour moving average again on Monday's trade through here, but the momentum could not be sustained. And once we moved back above it right here, you can see how the buyers or the sellers through the 200-hour moving average became buyers right through here, pushing the price above the 100 and all the way to the upside here. So we're sort of at the reverse point right here, where the 100-hour moving average, if broken, would have traders looking toward probably the 50% retracement here around the 124 level, natural level, and then the 200-hour moving average. It looks like 123.75, and moving higher would be the next key target on the top side. So there you have an explanation of why the markets are moving and trading here today, and a look at some of the technicals that are driving those markets. My name is Greg Michalowski. Good fortune with your trading. Bye-bye now.